This is the briefing for Friday, February 25th. In Wednesday's briefing, I talked about the fact that the stock indices appeared to need to gap down and just puke out the sellers. And I discussed that in terms of the market just needing to flush out all the sellers and then have buyers come in and start driving price higher. Well, we got the gap down in Thursday's trading, but we didn't see price run. And really, what it needed to do was to have a gap and run. And I covered this in last night's briefing as well. But we got a gap, but buyers came in immediately. So it doesn't appear to me that sellers were flushed out. This looks like a relief rally. I'm concerned over it because of volume falling off, and you can see volume falling off right through here. This is the spiders in a 120-minute chart. We also, breadth expanded very nicely over the last 2 days of trading. So it was supported by breadth, but not supported by volume. In other words, while more and more shares were trading higher, this rally was not attracting new buyers. In fact, the buyers were waning based on what was happening with volume. New highs minus new lows are still negative, although they recovered from a really pretty negative situation. Now, if we go back to the January 24th lows, which is right here, we had a gap down. And you can't see the gap on the 120-minute chart, but on a shorter term chart, there was a gap, and then price ran down right to the 420 level, and then buyers stepped in, and we got this type of rally, and then this pause, and then the beginning of another sell-off. So sellers exhausted themselves here. Buyers came in and drove price higher. In this situation, I'm just not clear as to whether sellers have really exhausted themselves at this point in time. Also, based on the fact that this is it appears to be a relief rally, there is the risk, or there's the potential for another move to the downside. What's going to be important here is what happens with our intermediate term support and resistance levels. Now, important to this is that 425 is an important support level in the spiders. 445 is resistance. Trading above 445 and closing above 445 would change the complexion of this briefing and my analysis, at least at this point in time. That would then suggest that this is a low. And if you remember going back all the way back during this time period here, I talked about the fact that this just did not appear to be impulsive, and that it appeared that the higher probability was at some point in time we were going to test and take out the January 24th lows, and that's exactly what happened in yesterday's trading. So it was very difficult to keep talking about that during all of this time period here, but it's still, from the internal analysis, it still appeared that the market was weak, and that the potential for another move to the downside was certainly greater. And that's, of course, what happened. That this is appearing to be the same way. So you can see even here going in after the January 24th lows that breadth expanded pretty nicely, but volume fell off. And you can see how low volume was going into that high. And then, of course, it stayed low through the rotation, and then, of course, started increasing on the move to the downside. Once again, falling off on the rotation up, and then beginning to trend higher on this move to the downside, and then culminating in Thursday's sell-off that we saw. Looking at what's happening with the NASDAQ, you can see that, I'm sorry, that's the Russell. No, that's the NASDAQ. Get my charts right. There we go. Okay, the NASDAQ basically took out the January 24th lows well before Thursday's trading. So we did have the NASDAQ, or the Qs, I should say, projecting that we were going to see that January 24th low taken out in the spiders. Once again, you can see volume was pretty good through this move to the downside. We had the gap, but then buyers came in immediately and drove price higher. But look what's happening with volume as it rotated back up again. NASDAQ breadth expanded very nicely, and in today's trading, and yesterday in today's trading, and certainly supported price at this point in time. So basically where we are is support in the NASDAQ or the Qs is right at the 341, 340, 341 level, and resistance is going to come in right around 355. So trading much above 355 or this high right through here would then suggest rotation back through this range, a test of 370, and I would predict that if that is tested, that it will get taken out and we'll see rotation back through the range. So while there's a lot of geopolitical events that are weighing on this market and the potential for interest rate increases, and I think the speculation is it's only going to be a quarter point interest rate in March, but if it were anything higher, then that could weigh on the markets as well. So we just want to be very cautious on our long positions. I did not get long in this part of the rally. I watched it yesterday and I kept thinking they were going to turn it back down again, and they didn't. Breadth expanded nicely yesterday as the rally went higher. And then, of course, there was follow through in today's trading. But as we closed in today's trading, you can see that we reached a point in the NYSE of being extremely overbought, and in the NASDAQ, not extremely, but at a point of being overbought. Volume also in the NYSE, you can see how it's fallen off in today's trading, and the same thing in the NASDAQ. So not attracting new buyers to this, and it does appear that that the indices are tiring on this rotation up for the last 2 days. This is a daily chart of the spiders. You can see this 450 level, very important. And then, of course, the 425 level, very important as well. Looking at the Qs from a longer term perspective, you can see traded above this 340 level. 350 is the next level of upside resistance. Then, of course, we're looking at 360 to 370, and then above that is going to be that 380 level. Once again, volume falling off in today's trading. Really very interesting to see more buyers not coming in and supporting this. In the Russell, you can see tested this 190 level. That was the next level of support. The low from this day goes all the way back to, this was January 28th was when the Russell made its low. And it's been lagging the other indices, and I've talked about that in the briefings also. 205 is next level of resistance up to about the 210 area, and you can see that right through there. So basically, it's the rally is certainly real from a breadth perspective. New highs minus new lows, just, it's strengthened today, but it's still negative. But volume is not attracting new buyers to this rally, and that's something that concerns me greatly. Volume drives price. So when we look at the other internals of the market, they give us a pretty good perspective of the additional strength or weakness of a move. But volume really drives price, and you can see that when you get this type of volume, our sellers bringing in this type of volume, you can see what happens to price. When you get this type of volume and you get only that type of move, you can see that it's probably not sustainable. Then you get another correction like this. So basically, if we're going to see a continuation of this move higher, we really need to see volume coming in and supporting the move, and for market breadth to continue to be as strong as it was in today's trading. Now, for Monday, one thing to look for is, you can see this is the spiders on a 30-minute chart. You can see the rotation right through here, right around this 436, 435 level. A break of that is going to give us a pretty good indication, but, and I've talked about this previously, and I see it all the time. When the market opens Monday, there will be traders that will try to drive price higher to draw in more traders, more money to continue the move higher. But if breadth is not as strong as it was in today's trading, you can see it was 2,102 shares. If breadth is not as strong, that's going to be a pretty good indication that it's not going to be sustainable. Those buyers will have to sell those shares because price will stall. And then, of course, you'll see rotation back through this range, and then a potential break of 435. So 435 is short-term support, and that break would then bring in the potential for more selling. Trading above and holding above, I guess this is about the that high is a 437, 438 level. That would then suggest that we're going up to test the 445 as long as volume is increasing and breadth is as strong as it was today. Same thing in the NASDAQ. You can see, or the Qs, you can see this rotation right through here. Should be a very interesting day on Monday, and there's a lot of things that could happen over the weekend to change the perception of value on the part of traders and investors. So should be a very interesting opening on Monday morning. Have a great weekend.